voice of FinTech.
Welcome to Voice of FinTech, a podcast mapping out the Swiss and global FinTech scene, connecting FinTech enthusiasts with startups, incubators, accelerators, business angels and VCs, and incumbents interested in partnerships. Voice of FinTech will help you navigate the FinTech ecosystem. Here you can listen to the startup founder stories, what investors and incumbents are looking for when dealing with startups, and find out more about resources provided by incubators and accelerators. My name is Rudy Falad and I'll be hosting this podcast. Hello and welcome to Voice of FinTech. Today we're joined by Fabio. Fabio is a serial entrepreneur who now runs a firm which is a trading firm specializing in crypto assets. And we're going to talk about crypto, the digital assets, how it all works, and have a bit of a follow-up on our live event, which we had a few weeks ago, which we called the Blockchain Crypto Digital Assets Reality Check. So shout out to Emily Raffo who connected us. And so Fabio, first of all, I have to ask, how are you today? How are you coping with what we now call a COVID fatigue, I guess?
Yeah, first of all, thanks a lot for having me. It's a pleasure to be here. And yes, as you say, I think we're still getting kind of used to the new normal. But yes, we can't complain too much here in Switzerland, I believe. I think there's other countries that have like a much worse kind of situation. So, yeah.
All right, depending on the day, but fair enough. So, as I mentioned, you're a serial entrepreneur in the blockchain space. So, what has attracted to it? What's the story? What drove you to do this? And as I said, it's not your first or only venture, right?
Yeah, so before starting Base58, I was in California in Silicon Valley and ran a company called Coinalytics that later became Scry, which was an analytics company doing transaction analysis on Bitcoin transactions primarily. And yeah, we sold the company at the end of 2016, which was when I came back to Switzerland and kind of transitioned more into the financial side of crypto assets. What drove me into the space, it's really... for me, it's one of the most interesting and exciting industries that are out there. And it was just, in my view, a very big opportunity to be an early part of something that could be as transformative as the internet to the world. So when I came across Bitcoin in 2013, I kind of went down the infamous rabbit hole and learned and read everything I could find about the topic, which back then was still possible. And yeah, my goal was to then contribute to spread essentially the world and establish Bitcoin and crypto assets as a new asset class in the world. And yeah, and from the other side, it's also just very mentally stimulating, I would say so, because it combines so many areas of expertise like computer science, economics, politics, finance, technology. It's a kind of all mixed together. And so that's what makes it so fascinating.
All right. So more specifically, what is your latest venture of Base58 about? What is the problem that you're trying to solve?
Right. So Base58, we're a technology-driven investment firm specialized in crypto assets. And yeah, I mean, our goal is really to drive essentially the adoption of crypto assets and decentralized systems because, we think they will have a very positive impact on the global economy and society. And so really what the problem we're trying to solve is to provide an on-ramp for traditional investors to this asset class.
All right. So are you a trading firm or an asset management firm? First thing first.
So we're an investment management firm. So we run funds. We have on one side a long-only fund, which is tracking a Bitcoin tracker essentially. That's based out of Malta. And then we have an actively managed fund where we run market-neutral strategies, so market-making, arbitrage, but all kind of in the crypto space.
All right. So who are your target clients? Are they institutional clients or retail or both, or how does that work?
So it's primarily institutional, and that ranges essentially from what we would categorize as institutional, which would be high net worth individuals and family offices, crypto fund of funds, which are, I would say, the more progressive side of institutional investors. And then, yes, we also work with, let's say, more traditional institutional investors, asset and wealth managers, private banks. Although there, I would say it's still more on like an educational basis for the most part. So I would say they're still a little bit earlier in the cycle.
Right. So I come back to what you said before. What is the problem that you're trying to solve? Providing on-ramp to traditional investors. So that's institutional. So what is the solution really, or what is the problem? Let's be completely honest. I think the story is that if you're an institutional investor that has a risk appetite to invest in crypto assets, you cannot use your bank that you used to, right? Because they are a little bit more conservative than you are. So is that the competitive advantage, that you are the first mover providing that versus, let's say, traditional banks who are worried about all kinds of, issues that they can see?
Yeah, so I think like there's two sides to this story, right? On one side, it's exactly what you're saying. So it's really like, how do you get access to this asset class, right? And so there's very few established products in the space today. Most investors, if they are, let's say, courageous enough to kind of get exposure to the space, they don't necessarily want to go through, how do I set up a wallet? How do I buy and sell crypto assets in the first place? So they don't necessarily want to kind of jump through all these hoops to start getting exposure. I'm not saying that that's not maybe the long-term goal for some of them, but it's definitely not step one. So we offer them like a very easy way to get exposure. And so that's on the passive side. And then on the active side, we essentially develop our trading systems in-house. So that means from the connection to the exchanges to the order and execution management, really to kind of exploit inefficiencies in the market and generate returns that way. So I think these are kind of the two distinct value propositions that we offer.
All right. So if I'm an institutional investor, want to buy into your fund, whichever passive or active, what's the minimum size of the ticket?
So the minimum size is $125,000. So it's really targeted towards professional and institutional investors.
Okay, understood. And then you said active. Obviously, if you studied finance, or for people who have, they in the good old days, you talked about fundamental analysis of the stocks or the assets and the technical one, right? And here, this is kind of a preview to the next question: is what is really a cryptocurrency to your crypto? Is it a currency or is it an asset or both? A lot of people who are completely new to this and believe that there still are. They say, well, what is it really? Can I buy anything, groceries in Migros, etc.? And frankly, they can actually. And the same thing on, the Swiss equivalent of Amazon called Galaxus. You can also buy electronics online, right? But that's I hear it's not the main use case anymore, or it is that has become clear. So what is it to you? Is it an asset, or is it a means of payment, or both, or how should we see it? Because obviously, over the last few years, we've seen prices of Bitcoin and other currencies going up and down a lot.
Right. So yeah, I think like I want to kind of preface this that the narrative kind of keeps changing, right? Like when I got involved in it was about payments, and it was about kind of digital currency, as you say. I think over the last couple of months and years, we've definitely seen the digital gold narrative kind of prevail more and more, especially for Bitcoin. And then the other side to the story is that they're not all the same, right? I think like cryptocurrency has kind of gained many, or crypto assets have gained like a variety of shapes and forms. For us at Base58, at least, there's a few characteristics that make it a crypto asset if you want. So it's about the decentralized nature of the protocol, so how it's operated, the openness, right. So who can buy, sell, transact in that system. The censorship resistance, I think it's a very important one. So meaning, if there's no way for somebody to, let's say, suppress a transaction. And finally, I think one of the most innovative things here is just the digital scarcity aspect of it, right? So in Bitcoin, it would be very hard, if not actually impossible to change the monetary supply at this point, right? Because everybody who's kind of buying into Bitcoin is kind of buying into this belief system. And so it would require an enormous amount of computing power if you would want to kind of overrule the system, or an incredible effort of kind of getting everybody in the system to agree that kind of that scarcity should change, right? Which I think it's very unlikely at this point.
All right. Well, so following up on that, as I said, how do you manage the in an active way, right? The asset like this, because there's no fundamental driver to it, I would say, because you cannot say, well, now Amazon in the US and everywhere around the world is accepting not Bitcoin but Ether, and therefore Ether price is going to go up. That's not how it works, right? So how do you manage that?
Right. So, I mean, the active strategies we run are actually market neutral. So we don't take a direction in the market. So for us, it doesn't really matter whether the market is going up or down. Obviously, yes, in a, let's say, more bullish environment, volumes are going to be higher, volatility is going to be higher, so there's going to be more opportunities. But in general, yeah, if we see a discrepancy where Bitcoin is high on one exchange and low on the other, we can sell on one, buy on the other, and vice versa. And so that's kind of the way we look for opportunities and then exploit them without necessarily taking a directional position on the individual asset.
Obviously, this year also the halving of Bitcoin happened, and there were big celebrations in the virtual world around it. So can you explain to people who don't know what the halving of Bitcoin means? What does that mean, and why is it important?
Yeah, absolutely. So yeah, maybe let's start at the beginning. So in Bitcoin, every 10 minutes, new Bitcoins are introduced to the system by a process called mining. And so for confirming transactions and essentially securing the network with computing power, these miners get rewarded with Bitcoins. And part of it is from transaction fees, and the other part is actually newly generated Bitcoins. So now coming back to the halving, every 4 years, the reward that these miners get is cut in half. So for example, in this cycle, we went from 12.5 Bitcoin every 10 minutes to 6.25 Bitcoins every 10 minutes. And so every 4 years, this amount gets cut in half. And this is how Bitcoin is scheduled to never surpass the total quantity of 21 million Bitcoin, which, yeah, as I mentioned before, is one of Bitcoin's most important properties, right? And yeah, so I think like that's kind of where, because there's never going to be more than 21 million Bitcoin, it's also the first time that we ever have an asset that where we exactly know what the maximum supply is. So even with something like gold, right, we don't really know how much gold there is. And then the other thing that's exciting here is really like how inelastic the supply is. So, for example, in gold, if the price of gold increases, all of a sudden, some of the gold sources become accessible because it's now profitable to access them. So your supply side increases. Whereas in Bitcoin, it really doesn't matter what the price does, right? Because of the way it adjusts its supply schedule. Every 10 minutes, these new Bitcoins are issued. And doesn't like the supply side doesn't care what the price of Bitcoin is doing.
Right. So it's about ensuring scarcity and basically avoiding inflation, things like this. Now, maybe following up on the age-old issues, and not to berate the point, but basically, from what I've understand from incumbents or more traditional investors, they had issues with scalability, KYC, things like this, which is hampering the wider adoption of cryptocurrencies or blockchain. But as you said, the narrative is changing, right, from a currency to an asset. That to me means the scalability issue is not resolved, rather than it's de-emphasized. And how do we then deal with the KYC, right? So that also is then related to perhaps the miners. I know a lot of people who bought rigs and now they are using it for Microsoft Flight Simulator because they are not mining Bitcoins anymore. So if those rewards are getting cut every 4 years, etc., as you mentioned, I think the scalability or the speed of processing of transactions is also not going to get sorted, or am I wrong? And then second question is KYC. How do you deal with that? I assume you are somehow regulated as a financial institution in Switzerland. So two things, scalability and KYC.
So I mean, on the scalability, it's really independent of like the hashing power, right? So the scalability is limited by what's the so-called block size. So every 10 minutes, a new block is generated. And so depending on how many transactions are essentially waiting to be confirmed, they can be packed into the network. And so there is a restriction on the maximum size, which is currently a little bit over 2 megabytes if it's like used efficiently. And so we can pack as many transactions as fit into that. And so the reason why there is this limitation is really to preserve the decentralized nature of the network, because what it would mean if we would to go and increase the block size to say, okay, let's do a gigabyte every 10 minutes, right? Then all of a sudden your data usage explodes. So you need better hardware, so more storage space. You need a better internet or more bandwidth. So kind of the hardware requirements would increase dramatically, which would limit essentially the ability for, let's say, the average user to participate in the network. And that's not only important from a mining perspective, also from a verification perspective, right? So one of the mantras of the space is don't trust, verify. And so what that means is, even I, as an individual, I can download all the transactions that ever happened on the Bitcoin network, and I can go verify that the Bitcoins that I own have never been spent anywhere else before. So I have like a mathematical guarantee that I own my assets at the end of the day. And so that's a very valuable property that would be compromised if one would have to trust somebody to provide them the data because they can't afford to process all the information themselves.
Right. So the block sizes, yes, sir, that's by design. Even though maybe still to dig into it, like if you have less miners, are you then more prone to this, infamous 51% attack or not?
Yes, of course. So if you have, let's say, less hashing power securing the network, obviously it's easier for an attacker to gather the 51%. Yes, but the speed doesn't change. So there is an algorithm baked into the Bitcoin protocol that every 2 weeks, more or less, it adjusts the rate of transactions or blocks generations based on the hashing power that's on the network. So what that means, if all of a sudden a lot of new miners join the space, then maybe this block size drops slightly below 10 minutes. So what's going to happen is the next cycle, it's going to become harder to actually find the block because it's self-adjusting to this 10-minute schedule, more or less.
Okay, understood. So it's dynamic. And then, sorry, you were saying about KYC?
Yes, and so in terms of KYC, obviously that depends a lot on the jurisdictions where people are based. For us in Switzerland, we are currently an SRO member with the VQF. So that means, we just do need to do kind of the typical know your customer onboarding policy. So identifying the person, identifying where the assets are coming from. Yes, I mean, I think that's kind of how it's going to end up being, right? So at the on and off ramps of crypto networks, it's kind of where this KYC and AML is going to happen rather than on the protocols themselves.
Right. And well, that is the point, right? I think it has become clear after all these years of education that, using cryptocurrencies is not completely anonymous to begin with. And then if you want to change it to a fiat currency, you need to go through an exchange, right? Or you have a wallet, and if somebody puts you in a dark room, then you probably tell them how to get to your wallet anyway, right?
I guess yes and no. I mean, obviously, it's a lot easier to essentially transport and transfer some of these assets, right? So there is certainly a difference there. I think also from a privacy perspective, these technologies are not static, right? So they are evolving, and there is going to be ways to kind of stay anonymous. But yes, I think we're definitely seeing a shift to be more and more KYC, more AML, more let's call it like institutional friendly type environments, right? But I think these are going to almost exist in parallel rather than completely going one way or the other.
I see. So, well, where I'm headed with this is that, recently Ray Dalio from Bridgewater said that the governments will eventually kill Bitcoin. Do you think he's right or not?
I think he's right in that they will try, but yeah, I believe he's wrong in that they will win. I think at the end of the day, crypto assets, and I mean, particularly Bitcoin, right? It's about the separation of money and state. And I think for the first time, we have actually seen an asset that lives completely outside of any regulatory oversight and independent of any jurisdiction. So there's no Bitcoin central bank or CEO that can, let's say, change the monetary policy. I think that's something that, especially in this time, it's something that resonates with a lot of people, right? I think like what we've seen this year in terms of, say, call them like monetary policy experimentation. I think it's part of what kind of drove the spotlight to Bitcoin as well. But I mean, we've seen it before. China tried to ban Bitcoin; they were not really successful. So I think the only way would require like some sort of unprecedented international cooperation and coordination to kind of shut down Bitcoin. And so if you think about, okay, how are we going to get Europe, the US, and China to kind of all simultaneously agree? I think there's like very little probability right now. And it's also just too small for them to care at this stage, right? Like we're talking a couple of $100 billion at the moment. In the grand scheme of things, that's not probably what these governments are too concerned about. And so, yeah, Bitcoin will keep kind of infiltrating society and solutions. And chances are that at some point it's almost going to be impossible for them to shut it down because it would hurt their own kind of constituents too much, right? So if everybody keeps getting more and more exposed to, let's just focus on Bitcoin for one. It's going to be very hard for a politician to say, okay, I'm going to ban it now because it's going to hurt the pension systems. It's going to hurt the savings of the people. So they're going to lose votes in the next cycle. So I think from an incentive perspective, it's very interesting on, let's say, an individual country level. And then if you look at it from an international perspective, I think there's a lot of interest there to look at alternatives, let's say, to the US dollar, right, as a reserve currency. And so maybe it's going to be the Chinese yuan, or maybe it's going to lead to for some countries to look at something that could be independent, right? Now, obviously, we're still very far away from these kind of scenarios, but I think that's kind of where we're headed to. So I don't think that they won't try to shut it down, but I think it's going to be very hard.
All right. So when you look at the crypto market cap and the Google search trends, is there a correlation? It seems to me that the crypto has lost some steam over the years, but when I talk to some crypto evangelists, they also disagree with me, and they say that there are new use cases being discovered and the potential is great. And it is something that you could compare, for example, in financial services to derivatives. When the first derivatives were used more and more, some countries or regulators were opposing it because they didn't have capacity to regulate it. They didn't understand it. And look now where we are, right? It is widely used. It's completely standard. It's nothing crazy about it. So what about the crypto?
Yeah, so I mean, I think if you look at to answer your first question, yes, there is obviously a correlation there, but I still believe that it's a lagging indicator. So as kind of the space evolves and there is some price action, then people start looking it up more, and that's kind of what's going to be reflected in the trends. And Yes, I think it's very fair to say that over the last 2 or 3 years, the public attention has been driven away from crypto. But I think that's like we have seen this movie before, right? In 2013, after the crash, it was all about, say, private blockchains, and crypto or Bitcoin was dead until essentially January 17, when the ETF kind of narrative came back up and kind of started getting some traction again. But yeah, if going back to, I don't think it's fair to say that the industry has lost steam. I would say to the contrary, right? Like Grayscale has almost $10 billion under management. MicroStrategy invested over $400 million into Bitcoin. And last month, PayPal is going to provide access to crypto assets to its 350 million users next year. Citibank is giving out predictions that are even more bullish than the ones in the crypto industry itself. And to kind of new developments, that's true as well, right? I think like this summer we saw like a very quote unquote small hype around what's called DeFi, or decentralized finance, which is really the concept of taking financial services and automating them through like smart contracts that ranges from lending and borrowing to derivatives to trading platforms to all sort of financial instruments that are replacing intermediaries with code or smart contracts, which is something that we're very excited about to see kind of how that space is going to evolve as well. So yes, I mean, to kind of long story short, from the outside, it looks like everybody has kind of gone away and been asleep. But I think from the inside, the crypto industry is probably in a better position than it ever has been before.
All right. Well, let's see what happens, Fabio. Good to hear that you are a believer, of course. So to wrap up, I have 2 questions left, which is, first of all, what is your favorite business book that you've read recently or this year? And let's not talk about the blockchain revolution, right? That's obvious.
Yeah. So I think there's, I would say maybe 2 of them. So one, it's more a biography, but it's called the Man Who Solved the Market, which is the story around the foundation of Renaissance Technologies, which is one of the most successful hedge funds, actually the most successful hedge fund in the world. That was very fascinating. And then on a purely business side, one of my favorite books is Never Split the Difference, which talks about negotiating any sorts of deal, and it's written by an author who used to be an FBI negotiator in hostage situations. And so it's very fascinating how they kind of translate some of these techniques to your average business book. And then that's really something that, I like to go back to it and kind of read up on some points there. So that's one of my favorite books.
All right, brilliant. So what is the best way to reach out and find out more about Base58 and yourself?
So I think base58.ch is our homepage. My email address is just my first name, Fabio, at base58.ch. I'm on Twitter or LinkedIn. Very easy to find. So please reach out, and happy to chat.
Great. Well, thank you, Fabio, and good luck to Base58.
Thanks a lot, Rudy.
Thank you for listening to Voice of FinTech podcast. If you haven't already, check out also voiceoffintech.com, where you will find all the episodes and additional resources related to the podcast. You can also subscribe to Voice of FinTech on Apple Podcasts, Spotify, Google, or any other podcast app that you like. If you have any suggestions on the topics or guests, or how to make this podcast better for you, please email us at info@voiceoffintech.com. Happy to hear from you. Thank you.